Good morning. It's October the 8th, 2015. Time to kick off another day of trading. Okay, we came in yesterday. Remember yesterday afternoon we talked about the knob spread and how it's probably the most certain trade out there going into the 30-year auction. And the reason for that is that they have to support that market to move the paper. Well, yesterday on the close, the knob spread was 28.09. This morning early when I looked in, it was 29.07. That's a full point. It's a great way to play the auction, the 7-year paper and the 30-year paper when it comes up. So today the biggest thing in the Treasury is going to be the 30-year auction. The 3-year and the 10-year were very, very strong auctions, and we'll see if the same is true for the 30. It's the toughest piece of paper to move during the auction. We've had prices at 128.30 and then 128.25. So that would make today's close 128.27 and a half or higher. So the tendency is for the market to rally higher. China's market, stock market's opened after a week of holidays, and the financial press was disappointed in the close of China's market. Hong Kong, Japan's, and France's markets were lower. China's market, the FTSE and the DAX were higher. In the United States market, the E-minis, it was off about 7 points when I took a look at it this morning. So equities are mixed overnight, and people are disappointed that the Chinese market did not rally further. An Indian central banker came out and pointed out the obvious, that the world's economy, China's especially, is slowing. And the Chinese bank official came out and said, no, that's not true. Our economy is just fine in China. So again, you never know what to believe and what comes out of China. It's momentum buying, it's momentum selling. If you see other people buying, you buy. If you see other people selling, you sell. So I think what's primal today for our markets is the direction of the E-mini, and right now it's pointed lower. Then the 30-year auction, and then we have today's news. Jobless claims 271. Bloomberg Comfort Index, Consumer Comfort Index at 43. It's grown the last couple of months. It's hard to see that number increasing, but you never know for sure with those guys. Natural gas inventories plus 100 BCF. And the reason it's in the summer, it's in the 70, 75 areas because of air conditioning. And then FOMC minutes. And the FOMC minutes will be looked at and scrutinized for hints about when the Fed will actually raise interest rates, and is QE4 on the table or a part of the discussion. And I like forever, I don't see how in the heck interest rates can be raised. So we're dealing with P's. The market is pointed higher. Our first sell is 29.03, 29.07. Sell 1. Might take a 1 to get in. We'll just have to see, but everything is pointed higher right now than 11 to 15 for sell 2. And this will be the slowest one to rally. The 30-year, if we are going to trade up, we'll outrun this one. Market can't go straight up because they need to rotate the price up and down. And we talk about this ratchet effects where, let's say 129 is where the offer is and the bid's at 30. And then the dealers take it higher. The bid moves up to 129. Then the market comes down to 02. Then they take the offer away from the market. It moves up. The bid goes to 02. The market comes down to 04. And that's how they ratchet prices up. And they'll put it down right to where the cash market can almost buy it. Tempt them. Trade isn't done, and the market goes higher. So this slow ratchet up is what we have. So my point is there will be back and forth in today's markets. On the buy side, pretty good support. We got that single print down at 26.5, so 24 Yesterday we're trying to buy 20s to 24s. Today we're going to be buying 24 to 28. Moved it up for 30 seconds. And then 21s to 17s. If the E-mini takes off and rallies this morning, we'll have to lower our buys and lower our sells. But right now it is pointed lower. And to me, the knob spread will prevent the 10-year from really breaking out and moving to the upside. If the market does rally, the buying will go into the 30-year. Okay, pretty strong market. We 57.03 to 58.10 in the overnight session. Big market. So we got resistance in the 8 to 12 area. You can see the spill came from 16. The last rotate up several days ago was 15. So 15 to 16 is pretty good resistance. And then we got the overnight high of 10. And we're currently at the buck. So 8 to 12 will be sell 1, and then 19 to 24 will be sell 2. And the knob spread's up over a point overnight. Pretty stout, pretty strong buying. 29.25 is buy 1, and then 17.21 buy 2. And the reason we're aggressive on the buy side is that to move the 30-year paper, they got to really take the market higher. Gold was pretty quiet this morning. It was within a buck of yesterday's close. Kind of motoring, moving sideways. The buying, we had a 39.41. That's where our buy area was. And then 35.37. You can see in K period we got down to 39. The sells in the 45 to 47 are 50 to 52. So we'll just leave it right where it is. That's where resistance is, 45, 47. 50, 52 allows them to get stops over 50. On the buy side, 41, 39. And then 35, 37 for buy 2. We talk about London as a great market to trade crude, gold, and currencies, and it's where equities and treasuries can turn, and quite often do. But metals, currency, and the start of the crude oil market with London Brent trades, it makes for very good trading if you can trade London time. Okay, looking at the euro, up this morning when I looked at it. Hopefully it probably still is up. And we made it to 13.25, which was yesterday's. I didn't write them down. We've had 13.25 as our sell points, so we'll keep them the same. Sell 1, 1300. Sell 2, 13.25. On the buy side, 50. And then 25. It's a 13 plus, 12 minus market right now. Keep that in mind. And then London broke out at 76, so we're going to put a question mark at 75. We come back down, 75 holds, goes up. We don't want to be short at 113. We'll wait to 13.25 or better to do it. So we're going to get that. We're going to test that breakout right now. Market makers in all markets love trading ranges. They can move markets around within that trading range. Nobody gets too upset. Nobody's hedge positions are stressed. It's what makes their world go round. And in currencies, you have all the liquidity in the world as long as you're in that trading range. But the second you break out of it, they shut down. There is no bid, there is no offer, depending on which way the market's moving, until it settles down into the next trading range. And that's what makes those markets really, really trend. So if you can take out support or resistance, you got a shot at a really, really, really big trade. And that's why people like to trade those. Okay, last night in crude we were 49.25 to, boy, that was way off. 48.25 to 50. There you go. That makes sense. So we just touched that. I mean, that's where resistance is. Looks like it's trying to trade up now. So we'll make 48.50 to 75. Sell 1. Put a question mark at 25. I think it's going to try to trade up in 49, 49 and a quarter. Sell 2. Can't get through 50. We want to be short. On the buy side, 47.50, 47.75. Buy 1. And then 47, 46.75 by 2. Playing that breakout area. A lot of the questions, military plan, you know, what comes next in with Russia and Syria? Telling the United States to stay out of their fly zones. This is our territory. Missile attacks so far. Israel is regularly attacked from Syria, Golan Heights, and deeper into Syria. The questions go around is, you know, what do we do if, you know, Russia shoots down one of our aircraft or captures some of our soldiers, or what do we do if they make incursions down here? So everybody's kind of scratching their head. I'll tell you what the United States will do: nothing. Israel would be the most aggressive player. But right now, Israel and Russia are cooperating, and so that's probably seems least likely. But it would be, what a great way to humiliate the United States: shoot down a fight, take out a military unit on a small squad-type activity, take down an aircraft, attack one of the American bases, and then watch the United States not do a damn thing, other than call for meetings to talk about it. And it would further Russia's aims. Russia right now is trying to change the world's currency reserves. They're talking about defaulting on their loans under the new arrangement, maybe based on gold, and that would have unbelievable negative impact on what the United States is doing. And humiliating the United States doing something like that would further that game plan, which is basically a plan for Russia to get out of all the money that they owe. Okay, we have two things going right now in the E-mini. One, the potential for a short squeeze, and it's a little early in the month for that, but at the end of the month it won't be early for that. So we have the greatest on the New York Stock Exchange short interest since right before the Lehman crash, and that's the fuel of short covering rallies. So 2000, stops above 2000, I believe, is within reach, and don't know if we can do it today. Resistance starts at 90. Jobless claims 271. That's the default number. Take a big move out of this range, and I don't see that happens. Will be the first piece of news. The inability to get through 90, 95, maybe 85. We're at 81.50 right now. Have this little spill. So 85 is a possibility. The first sell probably is, we'll make the first sell 85 to 90. And then if we blow through 90, we'll make the next sell 2000, 2005. On the buy side, support is at 70 to 75. Then if we break that, we'll be leaning against yesterday's overnight session lows in the 60 to 65 area. Bloomberg Comfort Consumer Comfort Index nobody pays any attention to. And then the FOMC minutes released this afternoon that they will pay a lot of attention to. So supports at 70 to 75, then 60 to 65. And then resistance is 85 to 90. Then basically I think it jumps up to 2,000. That's the way we'll play it. It'll take a bit to get everything up and posted. Going to get busy on that. Back with you as soon as possible.